Oh my God, the market is crashing. The Qs are down 1.8%. The S&P is down. How much is the S&P down? Over 1% right now. Just sell everything, panic sell, rip all of your hair out. Nothing matters right now except this giant crash that's happening right before us. Is the way that a lot of people are acting today, Joe. Is the way that a lot of people are acting today. But not outliers, because we have a plan and we know what to do, and we're going to go through that plan right now with those who are watching. So welcome to the Outlier Trading Room invitation only live stream. This will help you save time, make money, start winning with less risk. So go ahead and subscribe if you haven't already on the replays. And we're going to go through plans M, A, ETF, and sit in cash, and don't F up your portfolio. And if you want normal returns, listen, this is not for you. But if you want outlier returns, you are in the right place. Now, when to use each of these plans. Plans M and A are our most aggressive offensive plans. Now, we haven't been into those. One of the reasons why we didn't get into those was this breadth crossover that happened Thursday, October 30th. Let me mark on the charts. I'll mark here on the Qs. Thursday, October 30th was right here, this candle right here. Now, on that date, we had a crossover that said market breadth is not looking good. Market breadth is measuring our buy and sell signals inside of Outlier. When we have more sell signals, market breadth goes down, it goes bearish. When we have more buy signals, market breadth goes up, it's more bullish. And you'll also notice down here, getting less and less uptrends, more and more downtrends. So thanks to having a plan in the first place, Joe, we completely sidestepped this move. And even though we're in a trade right now, which we're going to talk about in just a couple of minutes, we're still up money on the trade, right? There's so many people who are going to freak out, lose their minds, like I was acting just a couple minutes ago, because they don't know what they're doing. Right? This is the channel dedicated to helping you figure out what to do in the market. All right. Does that sound like you're in the right place, Joe?
It does sound like I'm in the right place. And it's a relaxing way to trade. When you have a plan and you follow your plan, you know what your exits are. You don't have to freak out.
You know, Ozzy Ian has a wonderful point. We're crashing down to lows that we have not seen since last week. Exactly. So let's go through the plan real quick. So we're not in A or M because of breadth and some other parts of the plan that hadn't lined up. And that's okay, because we've been playing ETF for a minute, which is still up money. Thank you very much. And we need to look to reduce risk before adding new trades. So we need to review our active trades, which are in plan ETF. Now, plan ETF, do we have an exit signal here? So a Q exit signal, a Q sell signal. No, Qs are still sitting on a buy signal. Okay. The 10-20 bearish cross on the Qs chart. 10 is not under the 20, not happening today. What about a 30-day order block? We do have an order block that's developed up here. However, it's not 30 days old, not even close. So we can ignore it until it gets that age. And then it's not 3 ATRs above the 20 EMA. So there's literally nothing to do to close plan ETF today. Okay. So you're asking yourself, okay, well, if I can't close it, well, what about the other plans? All right, let's go through plan M real quick. The SPY has a bullish trend. Absolutely, hands down for sure. In fact, let's pop into Outlier real quick. And you can get access to Outlier for just 82 cents a day, by the way. Helped us completely sidestep this down move. We weren't in any aggressive positions, just a defensive position. And right here, you can see the 10 over the 20, price over the 50, the green trend right there. Okay, awesome. So we have a bullish trend. The SPY still has a buy signal right there, still active. And it's up since that buy signal, by the way. The fear and greed heat map has gone over 70. It's at 71. Yesterday, it was over 70. Yet another reason why I would not have taken a trade. So because of that, we're not going to run plan M or plan A. And the full stocks breadth has gone bearish. Okay. So the next step is, if plans M or A aren't set up, what about plan ETF? ETF actually may set up today. Sounds crazy, but it might. Uptrend in Q, uptrend in SPY. Both of those are true. Buy signal in both, that is true. The SPY heat map is over 70, however, so we would not be looking at SPXL. TQQQ, however, the heat map on Qs is under 70. Let's go to that real quick. Jeff, the fund manager, said he had to sell a kidney to make up for his losses today. Then you're doing something wrong, Jeff. You're doing something wrong. Pay better attention, Jeff. Okay, so it's at 69.51. So it's super duper close to being over 70, but it's still under. And it's less than 2 ATRs above the 20 EMA. Let's go to that real quick. It's in the value zone. That's what the green highlights are showing, is when it's in the value zone. It's still within the value zone. And the order block is there, but it's not 30 days old. So actually, Joe, you could enter Plan ETF today. You could buy the dip if you chose to today. By all means, you do you. I am not telling you what to do. I'm just a random guy on the internet. Don't listen to anything that I say. That's it. Mikey Mike, the market maker, says he wishes that you would quit talking so much, Joe.
Well, Chris, you pretty much have it covered. You just went through 3 separate plans in about 4 minutes, decided what would be capable of being traded, what would be risky, whether you need to do an aggressive play or a defensive play, and you just breezed right through it. So that I don't have anything to add.
That's a great point, Joe. Great point, right? And on that, right, you can take the trades any point that they're in the value zone. Any point that they're in the value zone. It's in the value zone today. Does that mean you will guarantee any wins? No, and you never will on any trade. And like Jeff says right there, could be a perfect day to get in. But that's up to you and your personal plan. I will not tell you what to do. And so to Joe's point, right, having a plan, following a plan is the easiest thing in the world when you are a trader. And why would we follow this plan? Oh, let me show you why. How about the 1,000? No, that's the wrong slide. This slide. The 1,140% back test, right? And I can guarantee you that somewhere along the way that there were absolutely red candles that look just like today in this plan that had an 1,140% back test in 5 years. That's taking an initial starting capital of $100,000 and making that 1.1 million in 5 years, following this exact plan. So choice is yours. Follow the plan or not. It's up to you. It's up to you. But in the meantime, Joe, how about we watch a couple of videos? Let's actually just one video. We can watch this video today from our friend of the show, Tom Nash, who is so funny because sometimes he's like, hey man, we should hang out all the time. And then other times he ghosts me for weeks. I don't know what to tell you about Tom Nash. I would gladly hang out with Tom Nash, but I don't know. He's going to do what Tom Nash is going to do. But we're going to watch this video together. And it is called Tom Lee Says, Buy Stocks Right Now Before It's Too Late. Now, I don't know when he recorded this. Let's see. It aired yesterday. So granted, if you are a dip buyer, it could be the perfect day to buy a dip. But let's watch this together. How's that sound?
Folks, this is huge. Tom Lee, who has been pretty much spot on the market for the past few years, just released a new prediction for the S&P 500, and it's a doozy. It came out about an hour ago on CNBC. You're going to get it right here. I'll give you the bottom line first. I'm not about to hold you hostage. I'm not about to waste your time. So don't click nothing, don't smash nothing, don't buy nothing, just listen. So Tom Lee, as I'll show you in a second in the highlights clip, just came out with a prediction that the S&P 500 is going from 6,800 to 7,500 by the end of this year.
Joe, I know you can read my mind. What am I thinking right now?
That sounds like a price target to me. And you don't really want to set price targets because you don't control the market.
You don't. You can only control your trades. And one of the reasons why you don't want to set a price target is you can become emotionally anchored to that price target, right? Let's say that the S&P 500 not only doesn't hit 7,500 or whatever he said this year or next year or 6 years from now, right? Let's say that doesn't happen. Are you going to sit there and wait in that trade for as long as it takes? I know I'm not. What about you, Joe?
Nah, trend trader would not do that. Outliers are trend traders. We're going to look for the signals. We're going to get in on the signals. We're going to get out on the signals. And we're going to let the market do what the market's going to do.
Exactly. So, and this is why I like to watch these videos, right? Because I never would have thought about talking about price targets today, but price targets are a completely asinine thing to me. Completely asinine, right? Because you have no control of the market going to that point, right? It's just as likely it hits 75 as it is 7,500, right? Either one of those things could totally happen. 7,500 is obviously a lot more likely than 75, but We have no control of it happening either direction. Either direction, no control whatsoever. And if I say the S&P is going to go to $75, prepare for the crash. At some point, I'll be right. At some point, I'll be right. But in the meantime, I can just continue making these predictions over and over and over. Look, you tell Kitty to go away. This is not the Joe and Kitty and Chris show. No. I see what you're trying to do there. Trying to milk the engagement like other vampires on this platform. How dare you, Joe?
She's an outlier, man. I can't keep her away. She's looking for signals or snacks.
Probably snacks.
That is almost another 10% from here, which is the equivalent of what the S&P does in a whole.
Wait. Joe, didn't this morning, I know for a fact, I don't know, I don't think I can find it that fast. Just this very morning, we covered a article on CNBC that said Goldman Sachs and Morgan Stanley both call for a crash. Just this very morning. And in that article, who was it? The guy at Goldman Sachs. Do you remember his name? David Solomon. He was saying that David Solomon, I would imagine a fund manager himself, he was saying, look for the S&P to contract between 10 and 15% over the next 1 to 2 years. That happens every 1 to 2 years, no matter what. It's always going to happen. You know, it doesn't happen all that much. Joe, are you going through like the fog? What is happening over there?
You see, a time zone change can really mess with the time that the sun sets. And right now, the sun is directly in the camera looking at you guys.
Oh, that's funny. Who would have ever thought?
Yeah.
Joe is fading. He's fading fast. Sending Kitty to save him.
It's like Back
Joe
to
is
the
having a
Future.
foggy mental breakdown.
It's like Back to the Future over here.
Oh no, his parents are never going to meet. The Calvin Klein underwear strikes again.
Yeah.
Whole year. I'm going to play you the clip right now, at least the highlights, and then we're going to talk about what this means for the market, what this means for your portfolio, and how we're setting up for this for the next couple of months. Let's hit it.
I think the market has a lot of walls of worry because we've got the shutdown, we've got China, we got the Fed speak, but the market's been up 6 months in a row now. Only 6 times since 1928 that's happened. So if you look at November, we're up 5 or 6 times. And in 1942, it was flat. So basically, November should be really strong. I think at least 200 points on the S&P. But maybe we wobble the first couple weeks just to digest all the gains.
Yeah, that's what I saw in your notes. So initially, there could be some choppy trade.
Well, I'm just saying, he totally called the wobble. Like, he nailed that wobble. We're sitting right up in the middle of that wobble right now, Joe. Joe is a master of all ghosting techniques. Hashtag no show Joe.
That's pretty clever, I got to say, the real Bane.
At this point, what's driving everything? There's still, I guess, sentiment is not positive, is it? You mentioned the wall of worry.
Yeah, I mean, if you look at it, like AAII, the average sentiment this year is still minus 11.5, like net solidly bearish. That's only happened 3 other times in 35 years, all in the middle of bear markets. So investors feel like it's a bear market, but we're up 17%, which kind of tells me I think there's a big performance chase into year-end. You know, over 80% of fund managers are missing their benchmark this year. I mean, I think there is something the market's trying to figure out, which is AI is consuming jobs, but that's turning it into profits for corporates. So like profits are expanding. And then we have profit margins have actually been going up in the middle of tariffs. So how are companies able to take 70% of the tariff hit, but margins are going up? So there must be a productivity boom somewhere. And then we have, like you said, $7 trillion of cash on the sidelines, but we have high rates. And so the Fed, I kind of think, is trying to not overheat the economy, but we know that you just point out, like, housing's in big trouble. So I would say it makes sense if inflation's in a good place and jobs aren't really strengthening for cuts to happen, and that would be really dovish. So I think that sort of comes together before the end of the year.
So you figure no problem with 7,000 by the end of the year, more likely something even above that in your view? Like what, like 7,300?
Yeah, I mean, maybe 7,300, 7,500.
7,500.
Yeah, so we still, in December, we would build on those November gains.
I mean, I ain't mad, right? That would give us opportunities to first get out of the smoky house that's burning down in Joe's neighborhood, but it would also give us opportunities to get into new trades. Hopefully, like Plan M would line up, right? What would that take us to? So let's go to ES on here. 7,500. Let me drop this off the value. Oh no, I don't want that one on. I'll take off the value zone here. 7,500. That's quite a ways up, Mr. Tom Lee. 7,500. Another 10% from here. I mean, I'll take it. Joe is on the outlier cloud 9. I like it. Joe opened a window. Joe has been canonized. Congratulations, Joe. Saint Joe. Joe is the extra on ghosts.
Yeah, 10%. I'll take 10%. You know what I'm going to do? I'm going to follow my plan. It's going to tell me to get in because the signals are going to come. And I'm going to trade it all. I'm going to trade it all the way up. It's going to be amazing. And if it doesn't happen, I'm going to follow my plan. And I'm not going to lose on the way down. It's going to be great.
No, that's that. Joe, what you're describing right there is not normal, right? It's normal for someone to come out and say, well, obviously the market has to do what I tell it to do, right? Obviously the market must listen to Mr. Tom Lee and his 101% hair. I saw that comment from Brandon. He stole the hair from my head and put it on his head. How dare he do that? But we're looking at this today and it's like, you know what? Could the market do this? Absolutely. But I'm not putting my money at risk to find out, right? It may or may not hit that point, and that's totally fine. Part of being a trader is being content with not knowing the future, right? I know the future, so therefore I must trade based on that. I mean, nobody's going to know the future, right? In fact, I have a slide for this, Joe.
Ooh,
the ghost of Joe told me to stay with my plan. A very spooky ghost of Joe. I have a slide for this from one of my mentors, one of the market wizards. It is not that one. Here we go. Those who ask me where the market will be in a year or at what level the S&P 500 will bottom totally misunderstand what it takes to be a great trader, right? Mark's not an outlier, but in principle he is. I'm in the business of responding, not prediction. Telling the future is impossible and unnecessary. I don't know. I feel like Mr. Tom Lee needs to know about this. Telling the future is impossible and unnecessary. Trading is a now business. So apparently, according to Mr. Tom Lee, that now is now. And Joe, you should call the fire department probably now. I'm just saying, like it's over at this point. Like if it's that smoky in there, it's over.
Yeah, it's donezo.
So as you just heard, Tom Lee just said that he thinks the market goes to 7,500. He also said that it might be choppy. He didn't say it's going to happen in a straight line. In fact, he said he predicts a little bit of a slump and then a crazy rally towards the end of the year.
Dude, if we got that crazy rally where the market goes up an additional 10% by the end of the year, we would make so much money. Joe, like it would be an unreasonable amount of money when Plan M would set up for the last few weeks of the year. I like back in May when I made my account grew by over 30% in the span of 5 calendar days. Okay. That's not normal. Not at all. And I know a lot of our outliers have done incredibly well, right? To see the market jump 10% in the span of, a couple months, even if you're in Plan ETF, Joe, we use leveraged ETFs in Plan ETF. That would mean a 30% gain on your entire account before the end of the year running our most conservative plan. Give me a break. This would be amazing. This would be tremendous. I would take this all day, every day, and twice on Sunday. Okay. And Joe, somebody send help. Somebody send help to Joe, or at least send curtains. Okay.
Exactly. If we get a 10% move on SPY, I'm buying curtains, everybody. It's going to be
yeah. Joe, somebody Amazon some curtains over to Joe. He can't be arsed to leave his house. He needs somebody to send the curtains over to him.
Also said that he admits that he's not certain that that's going to happen. Of course, there is no guarantees in this business, and Tom Lee isn't trying to pretend like he has a 100% certainty that this is going to happen. He did have a very high hit rate on stocks for the past few years, but he had bad calls like everybody else. So don't think because Tom Lee said it's going to happen, it's certain, and you're going mortgage your house to jump into the market right now, assuming another 10% from here. Now, the market, according to Tom Lee, it's extremely worried about the fact that we are in a euphoria, about the fact that everything is overvalued, stocks are exploding. So there is a lot of tension from professional investors, from experienced investors who are worried that this is just too much. On top of that, you have the government shutdown that is causing a lot of concern. You have the negativity.
And like nobody's talking about the assassination attempt on the 47th president of the United States anymore. That got buried under the rug. Now, if something that big gets buried under the rug, I'm sure the government shutdown is going to get buried under the rug real quick.
Mm-hmm.
That came out from Powell. He was a little bit hawkish. And you have the China stuff going on. And Tom Lee is basically saying that the combination of all of these is preventing from people jumping head on into this pool. They're still a little bit apprehensive. And that's a huge catalyst because at some point, he says they'll have to admit, we have to get in on this before it's too late. There's just too much money on the floor. Now, of course, he said it's not going to be a straight line to 3,500. Don't think it is. The market never does that. And I agree. Volatility is fine. It is a feature, not a bug. I just think that the truth is somewhere in between. He thinks that the sentiment right now is negative about the market. I think that is not euphoric.
Ooh, fear and greed index. I got a couple of those, Joe. Let's pop those over real quick. Hang on. Got to click a couple of extra buttons to do that. A little fear and greed index. So apparently the CNN fear and greed index is at 42. A little surprised by that. Let's go to the outlier fear and greed index. We actually see quite the opposite. We see the market getting quite more greedy. So that's an interesting divergence right there. I'm a bit surprised that the fear and greed index would be showing elevated levels of fear when we're, how far are we from all-time highs? Like Ozzy Ian said earlier, we're crashing down to levels not seen since last week. We're 2% away from all-time highs, yet we're deep in fear category right here. This doesn't make too much sense to me. CNN fake news. Wait a minute. Randy has breaking news. A friend called the IRS. They said that they were shut down. Doesn't mean we don't have to send out our quarterly tax payments. Let's freaking go. I don't want to send no monies nowheres. That's Batman always pays his taxes. This is facts. Joe, I mean, at this point, we have a bit of a divergence here, right? We can see the bearishness in the breadth of the market. However, the trends are still going strong. And because of that, we're still going to be rolling in Plan ETF. And I don't know how long we're going to keep doing it, but by all means, we're going to go until we get our exit signals. So if somebody were looking to save time, make money, and start winning with less risk, what do you think they should do?
They should subscribe to OVTLYR, and then you can learn more about OVTLYR by watching one of these videos up here in this cloud.
That is a brilliant idea, Joe. Joe, thanks so much for hanging with us today. You guys have a fantastic day. We'll talk soon.